Joining us now, Kevin Hassett, former chair of the Council of Economic Advisors, author of The Drift, Stopping America's Slide to Socialism. Dave Malpass, former World Bank Group president, former undersecretary of the Treasury. All right, gentlemen, I've got some sound. Let's play some sound from Trump yesterday on this Chicago thing and the tariffs, and you'll see what the response is. Here it comes.
It must be hard for you to, spend 25 years talking about tariffs as being negative and then have somebody explain to you that you're totally wrong. It'll have a negative, it's going to have a massive effect, positive effect. The higher the tariff, the more likely it is that the company will come into the United States and build a factory in the United States so it doesn't have to pay the tariff.
I mean, in a way, there you had it. Micklethwait is, defending David Malpass, a view of free trade, I guess, that is 25 years old or worse. I mean, it's just not real anymore. What do you make of that? Because that's what gave Trump the upper hand. When Trump said, you're 25 years out of date, you've been wrong for 25 years. I mean, yes, I suppose he was being facetious. But, David, I think he was being accurate. That's the thing. The economics profession is like the last to get on board with this.
That's right. The establishment really doesn't want change. And we have to recognize the trading system is really broken. We need massive change in that. I would extend that to the budget system. It's broken. We need sweeping change. The Federal Reserve's models are broken. That's the Keynesian model, the Phillips curve model. And so Trump's coming in and saying, I want a lot of change. And so big government types push back on that and say, oh, no, that would be the end of the world. VP Harris says she wouldn't change anything from Biden. So really what we have is this fight where Trump is saying, isn't it clear to the whole American public that we need massive sweeping change, and trade is one central part of that?
And Kevin Hassett, it's funny because reciprocity is the new free trade, et cetera, et cetera. But if you look at Trump's whole package, this is what annoys me. Economists, Wall Street economists and liberal economists like Micklethwait, blah, 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 from Bloomberg, they're all focused like crazy on almost like the word free trade. But you look at his whole package with tax cuts and a steady dollar as the world's reserve currency. You're going to cut back on the role of government. That's the Elon Musk Commission. Deregulation. It can't possibly be inflationary. And a dynamic model, Kevin Hassett, it can't possibly be anything but pro-growth and counter-inflationary.
Right. And the thing that I want to remind everybody of is that because of the China tariffs, the applied tariff weighed by the amount of imports that we have for the U.S. went from 3% to 14% during President Trump's first term. And we had 3% growth and 1% inflation. And so it didn't feed through to inflation. And the reason is that a lot of production switched to the U.S., but also to countries other than China. And so the point is, imagine that there's a company operating, say, in Canada, shipping stuff into the U.S., and then we put on a tariff. Then they could move the factory to the U.S. and avoid the tariff. And what's the extra cost really going to be? And the point is, if you look at the academic literature, there's not much of a link between tariffs and inflation. And the reason is that you can buy from the next best source. And the next best source could even be the guy you used to buy from who just moves to the U.S. And unless you think U.S. workers are way worse and way less productive, then the extra cost isn't really going to be that high.
All right, well said. Here's one. Federal Reserve came up yesterday in Chicago. Take a listen, folks.
Look, I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. I don't think I should be allowed to order it, but I think I have the right to put in comments as to whether or not interest rates should go up or down.
I like that a lot, Dave Malpass. I don't think I should be able to order it, but he has a right to weigh in. He's a citizen. He pays taxes. Why can't he have his opinion about interest rates and Fed policy?
He can. And, the Treasury Secretary meets weekly with the Fed chairman, and they discuss what the interest rates are. Nobody's giving guidance to the Fed, but they're having input, and the business community, Wall Street does, of course. And so I really liked the direction that this heads of the dollar as reserve currency. That goes, I heard you say, and I liked it, a steady king dollar. And so if you say that, and if the world believes that, that means means lower interest rates in the U.S. than they otherwise would be, and that means more jobs, more small business financing can come out of this. If you describe a growth model that's based on supply, you're going to get really positive change. And Harris, I'll repeat, she doesn't want any change. So she's leaving us stuck with inflation, with the debt going to $50 trillion. No change from her side.
Yeah. Kevin, just got 20 seconds, sorry. But this is the chance to reverse course. You can get government spending, deficits, and debt as a share of the economy bending down for the first time in quite a while. Don't you think, Kevin, that's hard? This growth model, that's what you can get. As a share of the economy, all the evils, all the bads, if you will, can finally start bending back down again.
And I know I got to go fast, but think about it this way. The average deficit under the Biden administration outside of the COVID years has been $1.9 trillion a year. Under Trump, it was less than half that. And a return to those policies will certainly reduce inflation.
All right. Thank you ever so much. Appreciate it, Kevin Hassett and David Malpass.